What's up, guys? Welcome back. All right, so I'm gonna go ahead and cover AMC before earnings here, and I want to talk about the projections I have for the next few months, what I see happening with earnings, and we'll kind of go over some other stuff here that I've been covering. So, what what are we looking? What are we looking like right now? We are currently 3% up for the day. Friday earnings we haven't had in quite some time, so I don't see anything crazy happening for earnings. Um, the cycle, as you guys know, is something that we cover here for these points of interest. Okay, let's fix this real quick. There we go. Look at that. Look at what TradingView is doing, man. What is this? Come on, get on it. There we go. You see that shift, bro? Why? Okay, so we're right in the blue pattern. The thing about June, right? So not much going on in the blue pattern. We know that this is where AMC tends to trade sideways. Why I'm not really calling for anything crazy now. A 15% push, a 20% push, even like a 30% push could happen. And that would not count as a point of interest. A point of interest is anything like basically above the 100% level, because that's where you're going to see that heavy volume coming in. So not to say that I'm bearish at all, but I don't see anything crazy happening. I'll show you what I'm expecting here. So we still are trying to come up to this trend line here, this ascending trend line of resistance. That's going to be step one. Okay, here's one, and then we have another one right here. Okay, so it's like a smaller version of it. This one slanted up a little bit. So the one I'm paying attention to for this earnings call here tomorrow could be that $7 range. Okay, that's ideal. We can come up here, get rejected, and then trade sideways as long as the chart remains bullish, because we're currently at a macro double bottom. As long as the chart remains bullish, we're good to go for June and then August. Okay, June POI right here, August POI right here. So we're lining these up with quad witching dates. Okay, these are important expiration dates in the cycle. Let's pull that up. And this is the projection. Okay, so I'm being I'd say pretty conservative with this. Looking at what other charts have done in the past before, when you have this much downside, especially like for 2 years, okay, you're starting to see things gravitate back up here. The cycle that we're currently tracking, okay, we're tracking a cycle back here. Now, this that you're looking at, like, I mean, it goes from 10 and then from 10 to 30. In order for this to be at play, the $10 level must be hit on the June point of interest. So that's the next one that's coming up here. The reason for that is, well, that's going to be the first time in 2 years that AMC crosses macro resistance. Okay, macro resistance on these POIs. So what that is basically saying, I don't know how that happened. What that is basically saying is that ever since the June run up, we haven't crossed the previous level of resistance. So we did something similar with Nikola. Okay, Nikola briefly crossed it and then got rejected very quickly. So when you cross resistance, you must hold that level for a few days, if not weeks. You can't just go up to it and then come back down and get rejected. That's called a fake out. Okay, so right now AMC hasn't done that. Okay, right here did not cross. Right here did not cross. And look at how close we're getting to it. So that level is 850. 850 is a major level we have to look at to cross. Once that is crossed, guys, we're likely also going to be crossing the spots indicator here on the weekly chart. You guys know how this works. Okay, look at where we're at. See how it's just writing it? Every time it gets close to it, every time it gets close to this, it gets rejected. The last time we had something similar like this was right here, which is the current cycle that we're tracking. So you can see right here, there's a blue spot rejected by a pink spot. trades sideways, just rides above the resistance curve line, and then it crosses. Okay, we haven't done that yet here. We have the same thing though, blue, pink, ride, and then now we're expecting a blue spot. So why we need to cross this like yesterday? Okay, we need to push to the $10 range in the June point of interest. So what that means in the short term is that if we have good earnings tomorrow, which I hope for, that at least we could come up and reach the $7, maybe even $8 range, because that means that we're one step closer to crossing resistance, and that is a big deal. If we head there, it's going to make it a lot easier for us to climb on the point of interest in June, mid-June. Okay, and the charts would look something like this. Say we come up here, get rejected, do something like this, and then in June, we start climbing up, and say we go all the way up here to like 11 or 12, and then we start climbing back down. Do you see how we're like making our way back up? The trajectory is changing, and what we're doing is we're building pressure, and the shorts are going to have a harder time stopping this, controlling this. This is why this is important. Stocks won't come down and then quickly bounce. You need to establish a trend to the upside to build pressure, and then you have your moment. You have what could be that potential squeeze, because that's where that threshold, okay, exceeds these margin requirements that the shorts have. So that needs to happen. That's crucial. And in order for us to get up there, once we go into the August point of interest, now we're going to be dealing with other macro levels of resistance. So we have this one, which is very close to the one that we had in March. So it's likely that if we come up here to 16, it's probably just going to go right through and bust right through, because this level of resistance, guys, it's literally, man, I mean, they're the same level. They're basically the same level. So the next level of resistance would be at 30. And watch this. This is where we zoom out and we go on the weekly chart again. This is just a nice little projector pattern. Okay, you ride back down, you come up to support, and then now we're building this little hat, right? This little projector. Projectors normally happen prior to large runs. So why I think the $30 level is a reasonable level is that's going to be a test here. It doesn't mean that we're going to stop there or could potentially get rejected and then climb down and then keep going. But this is what that would look like. I mean, you climb back up, you trade sideways, you head on over to that level at 30. And then now you have what could be either this wedge in the making or a flag. And that's just the start of it. You have to zoom out, look at the macro. You can take, for reference, you can take this right here. You can see that this is a little flag just to extend this guy over, right? And the fibs match, because that's just the way patterns work. Okay, the fibs match the levels. Okay, that's what we're looking at here, the levels. So 30 would be, if you take a fib or you take any sort of ratio, compare other patterns, which is what I've been doing, then you're going to get the same thing. You're going to get a very similar chart. So that will only happen, in my opinion, if we cross the $10 or get to the $10 range on the next point of interest. If we don't do that and this climbs back down to 3, then we're going to have like a Nikola 2.0. Okay, Nikola. See what it did. Now it's a bit of a different situation, but you can kind of see what it did, right? It pumped, and it's just like a never-ending wedge here, and it hasn't fully reversed. It's actually close to, in my opinion. We're starting to see more volume coming in, but it hasn't reversed yet, and it has a long way to go. So this is like the worst case scenario for AMC, and obviously we don't want it to get there, but I think it's holding itself pretty well. And yeah, I mean, the numbers are looking good right now for AMC. It's very close to crossing. We just need it to fully push through and go. All right. All right. So last thing I'm going to talk about, guys, is Pepe. Look at this. Look at this freaking price action right now, guys. Look, up 100% from the bottom here. I alerted this back down here at 10. Okay, 10. This thing went all the way up to 18. We hit our target at 17. Went up a little bit more to that 18% range. This was about a 700% return on the 10x, okay, with crypto. And now we're starting to curl back down. So what I see happening with this is pretty insane. So we're probably going to get rejected here. I already took profits. And I think we're going to climb down and do something like this. Now, this is going to be the test here because now we have a hovering projector. Hovering projector pattern comes down, not quite to macro support level, so it wouldn't, come all the way down here. It can, but I think this is more ideal. Remember, this is not on big exchanges yet, so it's likely that if it does bounce here, it will rally quite a bit. And maybe at this point, they're gonna put it on, Binance, Coinbase, stuff like that. And there's just going to be more liquidity. There's going to be more volume coming in. So you guys already know the market cap scenario I made with Shiba. Same thing. This thing is right now barely trading at a almost $1 billion now market cap, and it was trading at the $400 range, 400 million range when I talked about it. So keeping an eye on this one. We'll update when we get a little bit more data coming in. All right. That is it, guys. I'll see you on the next video. Bye-bye.